two great inputs for technical analysis. What? The first input is that the fact that price discounts everything. Price of a stock is always the latest price action. The latest information about a company is always available through the price, which means in the world of technical analysis, we say that price is equal to God, which means that like as we say that whatever God says is a final verdict, isn't it? I mean, someone says that this is what God has come in my dreams and said, right? So we say price is equal to God, which means that price is everything for us. Okay, if a stock is expected to have good news, good results, good sales growth, profit, whatever it is relating to, whether the qualitative or quantitative factors, if the stock is still down, but the news and every other prediction is positive, but still the stock is down by an unexplained margin, the stock is down, you will see eventually a bad news relating to that stock will come soon, which will prove the fact that the market knew before you and me knew. The price is down, it means there is something which is wrong. If the price is up, it means there is something which is going to happen positively if the price is up. So price is everything, and that even fundamental analysis kind of depends upon. Second thing which I really find useful in the discussion of fundamental analysis is that the data of fundamental analysis, the raw material, the data, is number one, very old. Number two, it is only available to a limited set of people, which means it's a classified information, not available anywhere, everywhere. Okay. However, the price data, which means how a stock is moving on right now. I mean, if the markets would have opened, would have stayed open right now, I could have shown you how the stocks are moving up and down. That's a data which is readily, freely available everywhere. So you don't need to be an insider or someone from the management to know all of that, right? Okay, to know about technical analysis, to do technical analysis, the raw material is the data. Which data? The price data of a stock. And price data is not released every month or every quarter or every year. Price data is available on a real-time basis. Right now, if a trade has happened 1 microsecond ago, that data is available free of cost to every person who wants to access it through internet. That's freely available. Okay. And this is the biggest important factor. Now, at the end, whether you do fundamental or technical, you are going to buy the stock or sell the stock, right? Now, what happens is that suppose you are a technical analyst and you know nothing about fundamentals. Okay. Now, suddenly what has happened is that the stock was like doing this is the price chart of the stock. This is the price going up, price going down, price going up, price going down. And the price was like this right now. And we have seen that suddenly the prices have started going up like this. Now, you have no idea about fundamental analysis, but something would have happened. And that is the reason the stock has broken out from its channel. This is called breakout. Okay, breakout, this point. When a stock breaks out from its main channel and enters into another channel, just like a railway track. Okay, when the train changes its track. Okay, this breakout is enough indication that something must have happened in the fundamental space, which only a handful of people are aware. But those handful of people, when they buy the stock through the brokerage, then there must be some decision, one either buy or sell. So whatever action you do, the price will either go up or down, and that price action will be available free of cost to everyone who is looking at the live price chart of the stock. Okay. Now, if you are going to your house in your car, and I don't know how to drive, I don't have a car, and my house is there on your way, and you are my friend, so what can I do? I can ask for a lift. Similarly, if I don't know why the stock is going up, I'm not one of the insiders, I don't know how to read annual reports, I don't know anything about the stock, I don't anything about the company, I don't know anything about the company, which business is it doing, I don't know. But I can see that something is cooking in the business, right? Something is happening. Now, if the stock is suddenly going up like this, there must be some positive news or some analysis which has been done. So let's say a research analyst had spent 5 weeks of his precious time inquiring about the management, the sector, the customers, everything. And finally, he has come up with a research report which says that you can easily buy this stock for another 30-40 rupees gain. He had spent 5 weeks on doing that research. And basis his research report, every person who was interested and who was given this research report started buying in bulk. Obviously, if everyone buys, demand is more than supply, the stock price will go up. If the stock price goes up suddenly, it means it has gone up only because of fundamental reason, not technical reasons. A stock goes up only because of fundamentals. But do you have the knowledge and time to check all of that? No. So you will just look at this, that the stock is going up. Suddenly it has broken out from its main channel. There must be some price action which has happened. What you will do is you will study the chart properly and see that it is actually a breakout or it is just a false signal which you are seeing. Now, once you have seen that there is a price action which has happened using your chart, basically, then you can predict or determine the future movement of the stock. Right now, it's clear that the stock has taken a new channel. Now it will do like this. Right? Then again, if there is a breakout next time, it is going to do like this. Which means when a stock goes up, it goes up like this. It does not go up like this ever. So you will get a prediction, you will get an indication of the future movement of a stock, of the future prices of a stock, of the future course of action of a stock, if you can study the price action based on the buying and selling which has happened in the institutions with the retail investors who have done fundamental analysis. And for that, you have to use the charts for sure. So basically, what is technical analysis? It is the study. You have to study, but what? Fundamentals? No. You have to study the price action with the use of charts to determine the future movements of the stock. Which means fundamental analysis focuses on the company. Technical analysis focuses on the stock of that company, which means the share of that company. That's the biggest difference. Now, if you're fundamentally buying a strong company in the long run, if it is good, so it is more relevant for long term. Technical analysis is more relevant for short term. Not that it cannot do technical for long term, but it's more relevant for the shorter period. Fundamental analysis can be done on any stock out of the 6,000 stocks listed in the stock exchange. Technical analysis mostly works in the top, let's say around 200 stocks, I would say, not more than that. In the top 200 stocks, it works. And I'll tell you the reason for that, okay? It works mostly essentially in the top 200, 250 stocks, you can say, from all the large cap stocks, some mid cap stocks of the country, okay? Apart from that, the raw material of fundamental analysis, which is old and which is not available to everyone, technical analysis data is available free of cost. That's the biggest advantage, okay? Apart from that, you should only know how to read charts basically, and you should have just little bit knowledge of mathematics and you're done. But in fundamental analysis, you have to understand the accounts to a level of CFA or a CA. Then only you can make these valuation models and do all of these calculations. Now, fundamental analysis, if I put it forward, I want to put it like this, that fundamental analysis focuses on what, or it focuses on why. What does it focus on? It focuses on why, right? If a stock has gone up or has to go up, why it has to go up? What is the reason of it going up? So when a fundamental analyst sees a stock has gone up, he will go back to his study table. He'll study the entire data of the stock of that company, do his research, come back after 3-4 days, and then he will want to buy the stock. But by that time, it will be too late. So instead of focusing on why the stock is going up or down, what technical analysts do is they focus on what has happened in the market. Okay. And basis that, they take their price decision, their action of buying or selling the stock. They don't waste their time on getting into the reason of why it has happened. They focus more on what has happened, and based on that, they take a decision. Basically, if you know that a bus is going that way, okay, to your house, towards your house, you hop onto the bus, okay. You don't need to focus on where others are going, why others are going, what is the reason why the bus is going that side. The bus is going that side, that's important. You hop onto the bus and you get down when your destination comes.